Alright, good evening, guys. This is just a watch list that I created. Something that y'all guys can take a look at and, chart this out on your own, look at it yourself. This is just for educational purposes, just showing you guys how I create my watch list and some of the tools I use. One of the tools over here at Rawstocks, we do have access to the unusual whales sector flow bot. So just type in slash secrot. DM me if you have any questions, but this is just an idea of where market participants are positioning themselves in each sector, determining based off that fear and greed. So we have seen day after day, we have slowly started to move up in the greed aspect. If y'all guys went over to CNN, looked at the fear and greed index, and we've been getting slowly and slowly closer to extreme greed. I don't know if we'll reach there, not trying to be predictive in that aspect. But we can see here that industrials, basic materials, and energy are most significant change. So I'll be looking at these sectors. That's one of the things I looked at when creating this watch list. So you do see, for example, industrials and cat and Uber on there. So all I did is I looked at this, and then I went over to XLI. I went to sector spiders, and I liked Uber and Cat because generally they have a good amount of volume. I know traders like to trade these. We might swing these depending on what we see in the charts. So going back to the charts, we see XLI in industrials, and then I didn't get any energy, but I think we have CVS in here, healthcare, so we might see some sort of downside. Not trying to be too predictive in that aspect, so let's get into it. Alright, so we do have the EM command. All this is just showing us the most concentrated amount of delta above and below spot price. And COTMP just stands for cumulative out of the money puts. We do have a concentrated amount of puts over here at 320, and then at this 322 strike price, there's a lot of calls, a lot. So, and then we do have a lot at 330. So I'll just mark this out, 322. So staying above this level, I guess I'll move this up to right here. So 322, we don't have to be too exact. And then, so we have an idea of where market participants have positioned themselves. We're generally, we could say that we're in a call dominated environment below us and above us. So this is nice to see. It's, we can expect it easier to move up than down as long as we stay above 322, but getting below this would make all these market participants significantly out of the money. So yeah, so we have 322 and 330. So I marked that on my chart. Get rid of this, and then we're going out to the weekly, see how price is looking. Alright, so we see we wicked over here multiple times. Wick. We see that buyers are present considering how this candle has formed. We opened here, came all the way down, get bought back up. Opened here, come all the way down, get bought back up. Just showing you guys some simplistic aspects of price action and how that's working. And then we displaced aggressively down and then get bought back up for the past 2 weeks. So we have about 14 green days. Yeah, close enough. And then we displace above 322, so I'm generally bullish when we're staying above this. I do notice that we have a small little fair value gap here that price is already offered fair value in, so that's nice. Getting above 325.91, I would like to target 330. Displacing above this, maybe look for a 15-minute candle close above it, and then going over to the 4-hour. Get rid of some of these lines, make it easier to see. We don't need all these drawings. Okay. So yeah, another thing going into this, by the way, is something that I like to use when I'm just trying to make this easier to see. I like to switch my candles from just normal candles, and this is just like choppy into very smooth visual representation of price action. I like to use the Heikin Ashi, and this is good. We do see that we have been range bound all the way, so right here to 325. Yeah, 325 to 320 pretty much. Like I said, I'm not trying to be too exact. And then I think it was 322 to 330. So yeah, staying above 322. I would like to see 320. Let's look on this in the hourly. Okay, we'll see if we continue to get this run down. Alright, looks like we're in a small little channel. See if this 322 holds right here. This looks like a key area of support for right now, as this is held. I don't know how strong that support is. Don't think it's hugely strong, but you know, getting it up to 330. Maybe get like an SR flip maybe from here. I'm not too sure, but just understand that we are call dominated environment, and 322 is support, and we can target 330. Next one is going to be Palantir. Alright, so we have 150, 115 below us. This is a huge support beneath us. Like, I don't ever remember seeing this amount of money, this amount of calls below us in terms of deltas. That's a huge value. And we can see that on the weekly, we do have some sort of resistance here. Remove these drawings. Whoops. Yeah, so just get rid of this one. I just like to clean it up a little bit. So all I did was I drew, you know, we wicked in this area here. We see price action respected this area multiple times. Maybe we can draw 50% of this weekly candle, and then go from here. And then mark out 115, 115 strong support. We already have that there. And then 130 is our most concentrated amount of calls above us. Alright, so do expect some sort of upside to continue to target these, maybe take out these equal highs, and then maybe get up to 330, but losing 115 I would consider you know, some sort of sell-off happening. But let's look at the 1 day. So we do see price you know, we had a significant sell-off because of earnings, then we get bought back up immediately. That just shows you how bullish we are on this ticker. People are buying the dip every single time. That's what I've noticed in this market most previously. We can see this here. We bought the dip at 105. That was an awesome time to buy. But let's see if we get this continuation. And then I'll take this off to the candles. See how we can identify a certain PD raise. Maybe I would want to see price offer fair value. See if we can dip down to 116 and get buyers a step again. Regardless, this is so massive that we might see 330 on the horizon, or sorry, 130 on the horizon next week. And all this would really take is getting above these highs at 125. I would definitely target 130 once price gets there. So mark out 125, take out these highs, see if we get a close above it, and then target 130. Yeah, just understand that this is generally bullish considering the environment below and above spot price. Next one is CVS. Alright, so CVS, we do have some sort of out of the money put speculation. This is kind of a given. We did go over the sector flow, and we did see that there was some sort of bearish volume in that sector flow in healthcare. So that's where we're at. We're in, retail. Well, I guess CVS is actually it's a healthcare corporation, but in the retail trade area. So this is kind of 50-50. We have out of the money puts and out of the money calls. There is no clear direction in terms of speculation. There is no significant support beneath us that I can see, but do understand that we could have some sort of gamma squeeze to the upside or to the downside, getting below either one of these levels. So 67, getting below that, I would expect more downside, and getting above 69. Keeping it very simple for you guys. This is not that hard. So yeah. I don't really care for this price action too much. It just looks like it's been all over the place. We do have a 4-hour fair value gap here. So yeah, I would like to see how price reacts here, losing 67. I would like to target these lows down here at 65. We'll see if volume consistently pushes us higher, and getting above 69. Let's see, 1 hour. I would like to target. I just really don't see us getting higher. I could see us pushing up into 69 and getting smacked right back down. So pay attention to that. Pay attention to how price might react within this range. I could definitely. I am speculating lower on CVS. Then Apple. Alright, so Apple, I did this because this wasn't like very clear at all. I mean, I guess it is. We have in the money calls and in the money puts. To me, this just means locked horns. This isn't like a clear direction in any environment. But to understand, below 198 is zero Jex level. So getting below 198, it's a negative transition to a negative environment, and then yeah, so we're not going to get into a positive environment until getting back above 200. I do think Apple's one of those tickers that people want to buy the dip on. They want to get Apple at a discounted price. So understanding our premium and discount zones that you can mark out on your chart. And then, so yeah, 198, I'll mark that out, and then 200. So this isn't really a area where I'd want to trade in. Let me flip these to make it more visual. 200, 198, reset chart view. You don't really need to see this anymore. And then go back to this. Alright, so you can see that this is some sort of support right here at 198. We see every single time buyers have stepped in. I would want to see if this continues, to see if buyers have stepped in this zone. We're already at 197.49. We don't know what could happen in the pre-market, but I'm generally bullish as long as Apple reclaims 200, and then we could target 205, 206. But there is some sort of weakness, considering we're already at 197.49 and after where market closed. And yeah, staying below this, I would like to see more downside. So it's a very narrow transition to upside and to downside for you. And then going over to the 4-hour, we see that buyers have not stepped in. Buyers are not really present, in the higher time frame. We did get a few green days and then get just immediate another red day. So yeah, look for a reclaim of 198, target 200, see if we get further. I do think it's one of those tickers that buy the dip, but I would not be in calls until we reclaim at least 190.30, 198.30. So yeah, but this has been resistance before where we get smacked back down. I would like to see how price reacts here. Going over to Caterpillar, looking at the 1 week. I don't think I grabbed. Let's see. Okay, I didn't grab it. Copy. Alright, so this one is our negative transition is at 320, and we can see that this is where price is, and you know, staying above 322. This is a key support area, a huge support area, and I would like to target 330 as long as we stay above that. So I'll go ahead and mark out 322. We can see that we kind of have a little bit of an SR flip right here. We do see that price has respected this area. I would like to see maybe on the 4 hour, see what's happening here. So it does look like price has reclaimed above 322. As long as we're staying above this, I would like to target 330. Maybe you could do a call 2 weeks out from now. Price action on Caterpillar is generally pretty slow. It's not a very volatile ticker, but this is on my watch list to upside. So keep in mind 322, like 50 is where I would, or 322.70 really. Getting below this, I would be hesitant to go long here if we get below 322.70. Do really like Amazon. This is something that I really like. Just look how much net delta we have below us at 190. This is our key support, so I could see continuation to the upside, maybe target 195 if volume stays the same. So we do see here that this is we get resistance right around that 190 level, right below 187 really, and then you know we displaced to the downside and buyers are just now stepping in, and I like to see this. So as long as we're above 190, we can go and do right here. As long as we're above 190, 188, I don't want to make any trades inside this range, 198 to 188, 190 to 188. I would like to see like 190.70. There'd be, you know, respected. We're still on the weekly, so we can zoom down a little bit. Just go ahead and skip the daily. So, you know, buyers have stepped in day after day aggressively. You know, this is just another buy the dip opportunity. Buy the dip. Buy the dip. So we can see that buyers are in control, and yeah, so target 195 next week, and I think that's a good play. And maybe look for us to get smacked down. Pay attention how price reacts. Take profits off the table. Take risk off the table. Whatever. But yeah, I'm generally bullish on Amazon. Could target 195 here next week. QCOM I think I really liked. Let's see. Alright, so we have 140 and we have 146 below and above. So 140 to 146. No, we're on the weekly. So we do have some sort of support below us, 146. I don't really care exactly where the cents are. I mean, it all depends. I don't think it's that important. I personally mark anything above 50 cents. So for example, if key support is at 140, I genuinely want to see price stay above 140.50. that's just how I like it. I like to do a 50 cents range above and below, but this is just mental. I'm not marking this out of my chart. So yeah, like if these people were holding 140 strikes, I don't think they would be that scared unless, or they wouldn't really care at all unless they start seeing like 50 cents below that strike. That's how I see it. Everyone might see it differently. That's just my take on it. We do see QCOM has stepped in aggressively. We're getting to the top of this range. Pay attention to how we react here, because we could certainly just get smacked down to come back down to 140. Okay, so yeah, so we could probably see this number. Draw it swing low to swing high. And then, see us respect 140. Getting a little SR flip maybe. Test this area of liquidity to come back up higher. This is just a golden retracement zone. It's just a fib I marked out. It's a fib extension tool. If you have any questions about that, just ask me. But it is a strategy that some traders use. And then we do have, next one is FedEx. So keep in mind, as long as we're above 139.50, target 146 on QCOM. All right. Did I do this one? Okay. So FedEx is really bullish in the money calls, and a concentrated strike below us, and out of the money calls at 220. So here we go. Boom. And then 220, 250. Yeah, I'm not trying to do nothing crazy in terms of technical analysis, just, draw on the wicks. This is a very basic thing that any trader can do. Like I said, I'm just using the Heikin-Ashi observing price action. This just makes it easier visually for me. But we can get into more complex things later. I'm not trying to do that deep of an analysis this late at night. So 215 is support. We see price has aggressively displaced. So 214 to 219, getting above 220. Let's look on the 4 hour. Maybe look for some PD arrays, candles. Yeah. So this is previous resistance 220. So look for us to get smacked back down if we can't reclaim this on the smaller time frame, maybe the hourly. Yeah, I could see us definitely doing this number coming back down. If volume does not get us above this, I would not go long unless we reclaim this, at least on the 15-minute, and stay above this. But I'll keep my stop loss tight. I'll do 220.63. And then, if we continue to see some sort of downside, I would, target these lows. But it looks like we're going to go lower. Go on the 15-minute on this one. Yeah, I could see us going all the way back down to 215. Does not look like buyers have stepped in. Look for a different picture, of course. You can keep your stop loss tight here. If you were to enter inputs right here, keep your top loss tight, 220. Be careful getting above that. This has been an area of resistance previously. So, yeah, wait for these candles to close. Don't be caught up on the wicks and getting stopped out on the wick. That's just my advice. Again, not financial advice, though. So, all right, and then 2 days. Boom. We have 80 below us, a significant amount of in-the-money calls below us, and a significant amount of in-the-money puts above us. But keep paying attention, the in-the-money call delta value is bigger than the puts. So I'm marking out 80, and I'm marking out 85. So where do you have that? I'm going to get rid of this. And we can go to the daily. Alright, so 82. Makes sense. We wicked into this area and get bought back up immediately. I'm generally bullish on Uber overall, considering the sector rotation, where Uber is and which sector. And you know, we did a little run on liquidity, which is nice. And maybe look at something on the hourly. And then we're holding above this, but keep in mind this would be my optimal trading tree. We're at 80. Getting below 80.23, I would, you know, this is where my stop loss would be. Pay attention to where this is at. If you do ever see Uber at 80, I could see it getting bought back up immediately. That's probably what we're going to see at market. We'll probably see it run down to 80 and then get bought back immediately and then target 85. We could see us creating the channel long term. So just understand that this is where a discounted range in which buyers are present and they're buying that dip. So yeah, if you guys have any other questions, just let me know. Leave a comment or just DM me. You know where to find me. This for you guys. See you guys later.